In this video, we'll go through the 4 main first-time homebuyer rebates and incentives here in Ontario. First, the provincial and municipal land transfer tax rebate, basically all of Ontario, but then Toronto has their own as well. Second, the first-time homebuyers tax credit, also known as the homebuyers amount. Third, the first home savings account. And fourth, the homebuyers plan, also known as the RRSP homebuyers plan. The first-time homebuyer incentive plan has been dropped in March of 2024. Note there are chapters and time codes along the bottom of this video if you need to navigate to one area over the other. Just quickly, I'm Callum Moore, eXp Realty real estate broker, and myself and my independent team are all over Ontario. If you are a first-time homebuyer and you need additional support right now, look to the description below. You can DM, email, comment on this video. I get back to everyone. More on that later in the video, but let's just dive right into it. Okay, so the first two are absolute must-knows. They basically save you money almost immediately, and the second two are fantastic as well, but they involve savings. First on the list, the provincial and municipal land transfer tax rebates, basically all over Ontario, and like mentioned, Toronto has 2. Land transfer tax is a tiered rate, a tiered calculation based on the price of your house that you've purchased, and anyone that buys a house, land, or condominium is subject to land transfer tax that's due on closing day. We'll do a calculation in a second, but who is eligible? You must be 18 years old, have never owned a home before anywhere in the world at any time, and your spouse must also have never owned a home during the time you have been spouses. Like mentioned, it's a tiered tax rate, 0.5% on your first $55,000, 1% from $55,000 to $250,000. It scales from there, but let's just jump into an example. This is a simple land transfer tax calculator, and I've already indicated my area of Kitchener, Ontario here. If we put, for example, you are looking to buy your first house, it says $650,000. It immediately calculates how much you will owe in land transfer tax at closing at $9,475. If we go and click I'm a first-time home buyer, it will automatically put in the max you are eligible to be refunded of $4,000, making the amount owed $5,475. Not too bad at all, $4,000 saved right there right away, but let's do Toronto as well. I'll just change the location here to Toronto, and as you can see right away, it has doubled, adding the municipal land transfer tax as well. If we click I'm a first-time homebuyer again, we can see it'll give you the maximum rebate for Ontario, $4,000, as well as the maximum municipal rebate of $4,475 for a total amount saved of $8,475 and a total amount owed at closing of $10,475. Note that when you are searching for a house with yourself and your realtor, you will talk to a mortgage agent. Everyone will be taking these costs into consideration due at closing. Again, if you need my support of finding a real estate agent or working with myself, look to the description below for more on that. Second on the list, a relatively quick one, but a great one to know, the first-time homebuyers tax credit, also known as the homebuyers amount. The goal of this one is simple, and I'll get into exactly how it works below, but it is to save you on your annual tax return, save you $1,500 on your annual taxable income. This allows first-time homebuyers in Ontario to claim a $10,000 amount on their tax return in the year they bought their house. This results in a maximum tax credit of $1,500, calculated based on 15% of the claimed amount. So simply, let's say you're paying $15,000 a year in annual taxable income. It is now minus $1,500 to $13,500. 2 quick notes on this. This is a non-refundable tax credit, meaning it can only reduce the amount of tax you owe, and it cannot create a refund if the amount you owe is less or zero. Also, one person can claim the full $10,000 amount, resulting in a $1,500 tax credit. If 2 people are buying together, they can only share that for a maximum amount of $10,000 or $1,500 tax credit. This, of course, is just an example. When you are doing your taxes, refer to your accountant or tax agent. Everyone's situation is a little different. Next, we get into planning to save, or the use of your RRSPs. Third on the list, first home savings account. This is a new savings tool introduced in 2023, and it combines both your tax-free savings account like structure as well as your RRSPs, but it is its own saving account specifically for first-time home buyers, which is fantastic. First, eligibility, they must be a Canadian resident, aged 18 years or older. They must be a first-time home buyer, meaning they have not owned a home in the current calendar year or preceding 4 years in this case. Contributions, the annual contribution limit is $8,000 with a lifetime limit of $40,000. Unused contribution room can be carried forward into future years, but only a maximum of $8,000 per year. Contributions to the FHSA are tax deductible, similar to an RRSP, meaning they reduce your taxable income for the year in which you contribute. Tax-free tax-free growth, the investment within the FHSA grow tax-free, similar to a tax-free savings account. This means any interest, dividends, or capital gains earned within the account are not taxed as long as they remain in the account. Withdrawals to purchase your first home are tax-free, provided they meet the qualifying conditions. The withdrawal must be used to buy or build a home in Canada. You must intend to occupy the home as your principal residence within 1 year of purchase. Note that if you don't end up using these to buy your first house, they can be transferred into your RSPs without affecting the contribution room. Of course, you can also withdraw them, but it will be taxable income. Let's do like a really good example, for instance. Okay, so let's say there's a 23-year-old person. They just went through college, they just graduated, and they are renting right now. What they can do is start, let's say they got a good job, right? They can start saving that $8,000 every single year for a potential of 5 years. That $8,000 as well every single year can be used against your taxable income, meaning let's say the person is on about a 30% tax rate. That can reduce that amount by $2,400 over those 5 years, saving you $12,000 in taxable income. That interest that is growing, let's say it was 5% annually on that $8,000 over the 5 years, that now accumulates to a total of $46,000, and all of that can be used tax-free to purchase their first home. So they saved on their taxable income. That money was growing interest-wise, tax-free during that time, and if they use it to purchase their first home, that is also a tax-free investment into their future. Fantastic saving plan to start now if you can. Let's move to last on the list, the home buyers plan, commonly referred to as the RRSP home buyers plan. If you don't currently have any RRSPs, skip to this point in the video and discuss how we could possibly help you find your first home here in Ontario. But this one is a federal plan that allows qualified first-time home buyers to withdraw up to $35,000 tax-free from their RRSPs. And if it's you and your spouse, you both can withdraw $35,000 each for a total amount of $70,000 of RSPs. Repayment wise, you do have to start repaying what you withdrew within 2 years, and you have 15 years to pay that off. It's a similar criteria as before of who is eligible, but let's break down some steps of what to do if you do have to start withdrawing your RSPs. For example, if once you do have an accepted offer on the property you desire, you will fill out a T1036 form and contact your bank or banks about withdrawing your RSPs. After your withdrawal has been made, your financial institution will send you confirmation of how much you withdrew, and you'll be in good communication with your real estate lawyers and plans of payment. Just note that if you don't make your repayments right after the 2 years, it will be included in your taxable income. So again, talk to your tax agent on that, find out what is best for you. I'll quick actually mention as well rebates on renovations. First-time homebuyers that purchase a house that needs extensive renovations do have rebates available to them. The GST HST substantial housing rebate allows an individual to recover some of the GST or the provincial part of the HST paid for their house. This is something that I'll actually leave a link as well, because I know it's not for everyone. I don't want to overwhelm everyone with a million of these, but I'll leave that link in the description below for you to read. And if you are someone who plans on buying a dilapidated house to renovate and has to be major renovations, that could be for you as well. It's so valuable to know these rebates when you're buying your first home in Canada. It can be tricky, can be hard. These are here for you. It's good to know, good to have the knowledge. And like mentioned, if you are looking for a realtor anywhere in Ontario, reach out to myself. Myself and my partners are hyper local to Waterloo Region, but we have people, 135 agents all over Ontario that I can refer to you and help you no matter where you are. Like mentioned in the description below, DM, email, comment on this video. I get back to everyone. I really hope this helped if you're buying your first house or if you are a real estate agent helping buy for your clients. I'm Callum Moore, eXp Realty real estate broker here in Ontario. Thanks so much for watching, and we'll see you in the next one.